HDB upgraders really be your exit strategy if you buy a new launch today? Let's talk about this. Guys, if you are looking to buy a new launch today, the biggest question you probably keep asking isn't whether the price will go up, because based on data, based on trends, most likely price will go up lah. But you're always in your mind, you are thinking, who will be the one that's going to buy from you when you're trying to sell? Will you be stuck in a situation like game of musical chairs? When the music stops, then you are standing down there, you don't have a chair. And you always hear agents tell you that
HDB upgraders will buy from you,
blah 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 blah, but you ain't sure about the affordability, whether is it even realistic at the beginning or it's just another sales pitch to make you buy. Honestly speaking, right, I also have the same fear as you. And to be honest, I'm also human. Nobody wants to buy without clarity. So I did a deep dive on the numbers to assess the feasibility, because in this channel, we always advocate taking calculated risk instead of having blind faith, what people tell you, then you believe and just go and buy, instead of following the hype or blanket statements like
near MRT, best location, CCR versus RCR prices.
Traditionally, right, the answer has always been HDB upgraders, because they sell their flats, unlock equity and move on to a private property. But with the prices today at record high, right, even you talk about CCR, Sky Holland, Cascaden, are they all HDB upgraders? Answer pretty clear, which I'll be debunking all these things. I'll share within this video because I did the research before I bought my property. I compared OCR, RCR and CCR. I had the options to buy either of them. I'm going to break down the numbers to you, real examples and the data behind Singapore's property cycle. Who are the ones that's really buying? What we're going to do this video is, number one, we'll break down the affordability using real numbers and 2 case studies to see if HDB upgraders can really still afford today's new launches prices 4 years later. Because today you buy, your exit is 4 years. So we are trying to calculate whether can they even afford to buy from you 4 years down the road if you're looking to exit and upgrade to the next property. Number 2, we'll take a look at the key trends that I noticed, from market direction to income growth and the demand from HDB upgraders in different regions, so that you can understand what will shape the next property cycle. Last but not least, I'll share with you what you should be doing as a serious buyer in this season, so you can move with confidence instead of fear of missing out or the hype. The way I ran a search on all this kind of content, right, I realized that on YouTube, most of the property content are circling around the new launches, and content like this takes me a lot of time to do my research. So if you could like this video, it's going to help me a great deal, and thank you for doing a good deed today. For the first case study, let's start with a typical HDB upgrader from Yishun, a 5-room flat that was bought in year 2015 for around $300,000. Today, the same flat sells for about 800 plus to 900k. After clearing the remaining 100,000 loan and refunding to the CPF, the owners will still have about 500 over 1,000 in cash proceeds. Add back their restored CPF OA balance of about 250,000 and 10 years of savings, roughly about $2,000 a month. Is it practical if you bought a house and you are saving 2,000 as a couple per month? Let me know. Now they have about $1.03 million ready to reinvest. That's enough to cover down payment, stamp duty for a property that's worth about $3.4 million if you use a 25% down payment and a 5% stamp duty as their absolute outlay for the purchase. $3.4 million can easily buy 4-bedder today in the RCR even. But realistically, most of them will be looking at something between $2.3 to $2.6 million, like a comfortable 3-bedroom in the OCR or maybe even an EC. Makes sense, because if you are one of my followers, right, I always say you need to allocate at least a 20% buffer on the capital available in order to tide through difficult times, or to prevent yourself from having to sell at a loss because you cannot afford to pay for the monthly installment. Now let's compare this with somebody who bought a 4-room flat in Bidadari back then for about $500,000. Today, those flats easily about $1.2 to $1.3 million based on my last check. After clearing $200,000 in loan and refunding about $350,000 CPF, they are now left with roughly about $750,000 in cash proceeds. I would like to disclaim the CPF is variable because it depends on the income that you are making. However, CPF plus cash is still your capital for your next purchase, so don't need to type hate messages lah. Add $350,000 CPF and $240,000 in savings based on $2,000 per month as a couple for the last 10 years. In fact, I'm being very conservative over here. Don't you agree? Because if you're staying in the RCR, most likely you can afford to save more than $2,000 a month because your Grab ride also cheaper. You maybe also don't need to drive because every time you take MRT is faster, because if you stay Yishun, the jam tram and the MRT travel is actually quite long lah. But I'm not saying Yishun people poor because my wife also stayed Yishun last time. But jokes aside, right, that's enough to fund the down payment and stamp duty for a $4.4 million property. But realistically, they will most likely be buying between $2.8 to $3.2 million, somewhere in the RCR 3-bedder, or maybe the even upgrade to a CCR if they have been saving a lot more, depending on their lifestyle needs. Or in fact, many of the people that I do consult that they are staying in the RCR area, HDB upgraders, right, most of them even have the means to sell one buy two. So whether is it a heartland upgrader in Yishun or the prime upgrader in Bidadari or Queenstown, both groups actually have significant capital power. So the myths that HDB upgraders are priced out just isn't really true if you do the math lah. But of course, if you are lazy and just want to find reason not to buy, right, then you will say that you'll compare your friends that are not buying and you say that the people cannot afford. But if you are somebody that is really looking to build a wealth through property investment, then you will study those people that can actually afford, and that's exactly what I did lah. Addressing the down payment, the next biggest objection will be
property prices have gone up so much, income cannot keep up lah.
So let's take a look at this chart, Singapore's URA property price index versus nominal GDP. Over the last 4 decades, they've moved almost in tandem because government has the habit of implementing cooling measures to make sure that property prices are in check. It is to their interest to make the GDP constantly go up because that means people are actually earning a better income. So interest to bring down the prices, and on the flip side to increase the GDP means to say that government is constantly trying to keep prices in check. And if you didn't watch my previous video, which I talk about how a couple can buy a $2.5 million property before they turn 30 years old without using PAP. PAP, I don't mean the government. PAP stands for Parental Assistance Program. They don't need to borrow money from their parents even to buy, just by having a job. And if you are concerned about the income, all these things, and you think that people's pay are not increasing as much, go check out that video for greater clarity because I've really done the research so that you don't have to. And if you are convinced to buy already, just go down there and give yourself a greater sense of reassurance. And you can thank me later. Not wrong to say that prices are higher and a lot more people cannot afford. Why? Because back then, anybody, Tom, Dick, Harry, can afford a condominium. But these days, sadly to say, if you are working in the higher paying industries like tech finance and stuff like that, you will likely be able to afford. Why? Because the starting pay has increased a lot. So go check out that video. What I'm trying to say here is that it's not disconnected from reality if you really spend time to study or watch my video or subscribe to my channel. Thank you. It's a simple math. A household earnings 18k a month can service about $9,300 based on TDSR at a 4% interest rate over 30 years. That works out to be a loan of about $2.1 million using TDSR to calculate $2.1 million plus the down payment of $1.03 million for the Yishun and the $1.4 million for the Bidadari. Here you have the math. But I'm not saying that they will stretch all the way to do so, but at the same time I'm also factoring in that they are only saving a small part and they didn't actually make money in the stock market during the COVID period as well, just based on $2,000 savings per month. You know, inside the comments, I would love to hear from you whether is this a fair statement or you think that I'm just another
scum of the society trying to convince you to go and buy property and take commission but you lose all your hard-earned savings.
Let me know inside comments. Let's take a look at the real data from recent projects to understand who are really buying condos today and which segment are the ones that HDB upgraders are actually dominating. In the OCR and some RCR project, the majority of buyers are still HDB upgraders. For example, in Riverfront Residences, that is Hougang. I previously bought one unit there before. About 61.8% of the buyers have HDB addresses. And when we say people with HDB addresses, high chance they are HDB upgrader or maybe first property that they're buying but their parents stay in a HDB flat. At Esta in Geylang is about 50.6% of them are HDB upgraders. Just to recap, back then when they launched, it was between $1,400 to $1,600 per square foot. So it was pretty affordable for HDB upgraders at that point in time. Even at Park Colonial in Toa Payoh, it's still about 42.2% HDB upgraders and majority 57.8% are private property owners. That means more than half of the buyers in the mass market and the mid-tier RCR are still upgraders from the HDB and they form the backbone of the demand in the segment. And the more interesting part is today, if you are targeting the CCR and the more high-end RCR projects, like for example Martin Modern or River Green, which are around the River Valley area, the percentage of the buyers with HDB upgraders dropped sharply. At Martin Modern, right, only 15% of the buyers come with HDB addresses, and back then the PSF of Martin Modern wasn't super out of reach. It started from about $2,000 per square foot at their range. So the owners who profited from earlier launches then were upgrading and trading gearing up for location and prestige. And if you didn't know, right, some people even do a gear up and use their children to name to go and buy a property. Not sure whether it's legal, but I will check before we post this so that I don't get into trouble for that. And we cannot rule out PAP, right? Some of these buyers, right, the parents already own private homes and they are just trying to help their children enter better locations earlier, because especially when they believe in property and they want their children to understand the logic of delayed gratification. Whether it's HDB upgraders buying OCR properties or condo upgraders climbing into the CCR, the upgrading ladder is still very much alive. Just goes to show that it's a Singapore dream to use property as a form of investment, because you don't really hear friends losing money or going bankrupt because of buying a property. Probably the property made them bankrupt because they lost money in the stock market and they couldn't afford to pay for their monthly installment. That's the story they tell you, but the actual truth is that they overspend in other things. Disclaimer, any resemblance is purely coincidental. That's just purely based on my own observation. Before I move on to what you should be doing, another trend that I noticed is that in 2025, there were 7,000 HDB meeting its MOP, translating into HDB upgraders. If you think the market is super crowded today already, right, think again, because 2026, the number will be double of year 2025, and 2027, you will see even more, triple of 2025. So it means that thousands of new households will be unlocking equity at the same time, and many of them will be looking to upgrade. So why I'm sharing with you this is because if you are somebody that is a bit mind-blocked by the current prices and you are waiting for the market to actually correct before you enter, please think again and do your due diligence in your research. Don't just listen to your friends that are not buying to give yourself reinforcement that you shouldn't buy. Really do your studies, because I predict 2026 and 2027, with the interest rates going down further and more HDB upgraders coming into the market, most likely you will get priced out once again. So don't be like most of our parents. Yeah. Let's go on to the next segment. And coming to what buyers should be doing, right, I will always fall back to my 3 golden principles, which is number 1, start saving and start investing as early as possible, because as we age, the amount of leverage will decrease. Number 2, constantly upsize your asset net worth by upgrading to the next asset class as soon as you can, because you need to move up the ladder to grow your net worth. Last but not least, always try to have a 18 to 24 months reserve funds, if not a 20% buffer on your investable capital, in order to tide through difficult times and avoid having to sell when you cannot pay for your monthly installment. Coming to what buyers should be doing, I feel that if you have the budget to go for a new launch today, especially if you can go for a 4-bedroom, right, you can watch my previous video, because I broke down the data to show to you like why is it more advantageous to enter into a 4-bedroom today, even if the location is not something that you prefer. Why? Because if you take a clear perspective, if this time round, even if you buy a property, that will not be your last property, because you'll be looking to upgrade maybe to a landed or a bigger property later on. This should be considered a capital building exercise. Therefore, if you are waiting for the best location and you keep missing out on the new launches that you have been looking out for, right, I would rather you watch my video and you gain some clarity there. So the trend is very clear. As the per square foot pricing goes up, right, you realize that there are more condo upgraders or buyers who are currently staying in their parents' home who stay in a private property. And by now you should know what I'm trying to say, Just now we say PAP, right? May or may not be, but I would think that these days we have progressed to a certain era whereby people know how to build their wealth even at a very young age. But these days, youngsters are really very smart. I would think that they are much smarter than even myself. So having said that, if you're a youngster, want to buy your first property or you're upgrading, call me. I will help you. Remember to like, comment, subscribe, give me a call if you wish to get my consult, and I'll see you next week. Bye.